Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Monday, January 27th, 5:36 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with the deep red edition of the Revere Roundup Daily Market Insight video. Market state, we're in an uptrend. Check the trend gauge over here. Leaders have been downgraded from green to neutral with a red sub arrow. We'll get into why momentarily. As far as the major indexes go, we still got the three green arrows, although there is some weakness with the NASDAQ 100 breaking the 21-day moving average. That's our short-term indicator, and the small cap index unable to reclaim the 50-day moving average. Long term, the major indexes are still above their 200-day moving average. The market never gets into serious trouble as long as we stay above that 200-day moving average. But individual stocks obviously have higher risk. And over the weekend, a lot of press was given to a Chinese AI model called Deepseek. Deepseek. They published a paper and claimed that and this was the tests were confirmed that they are as good or better than the major AI LLM models that are already out there by the likes of Meta, OpenAI, Grok, Google's Gemini, and that's nice. But they also claim that they developed it without the use of the high-end NVIDIA chips that were apparently so absolutely needed for AI generation. And they claim that their development costs were also substantially less than the billions of dollars, tens, hundreds of billions of dollars that the big tech US companies have put into it. And this turned the entire AI data center theme on its head today. Massive losses. This really qualifies as a black swan event for this theme, this sector. We'll show you the damage shortly, but we're talking stocks down in the 20s up to 30%, including NVIDIA, the big leader, and Marvell and Broadcom, two other massive chip companies, down 16, 17, 18% on the day. This is not something I've really ever seen before. We got hit hard in-house, our worst individual day loss that I can ever remember. Um, and several of the key rules that we go by were certainly put to the test today. One of them is we don't diversify by asset classes, we diversify by sector. Well, the losses in these AI themed stocks covered 10 different IBD sectors, broad sectors. They only have 33 of them. So arguably, it's one theme. A lot of our holdings were spread across multiple sectors. We got stopped on seven different positions that had some sort of a link to this AI data center theme. And you're going to see a lot of geniuses out there saying, I told you that this was overhyped, but they're going to be celebrating the losses, but at the same time, they probably didn't make a dollar in gains. We gave back quite a bit today, certainly more than we would have liked. Really, our balance at risk model, uh, we way overshot with the gap down by about 250 basis points. In other words, we suspected and that's the reason why there's an E in Rebar, Revere estimated balance at risk. It came in to the day about 5.6%. We're leaving the day out 3.4%, but the portfolio itself was down 5.2%. So we overshot to the downside where our stops are going to be. That's a risk. Uh, Anytime we can never guarantee that we're only going to lose what we say. That's why the E in there is estimated. But so we're going to look into put our data scientists to work and come up with an additional buffer to that quote. I certainly don't like thinking that my maximum to the downside is 5% when it actually is 8%. But that's what was revealed today. We're fully transparent about it here at Revere. It was something we hadn't seen. Certainly, we something we didn't expect, and there was no bounce whatsoever in these names today. On the positive side, the Dow was positive. The value half of the S&P 500 was up 1%. So it wasn't a wholesale exiting of the market, but it was a massive rotation. Hedge funds don't fool around. They're very leveraged. They can't handle big losses, so they sell immediately. They sell first and ask questions later, and that's really what we saw across a bunch of these names today. They weren't supported, some gap down 10%, and you would look for a bounce, and it ends up down 12, 14, 16% or worse. No buyers at all for this group of stocks. So, what does it mean? It means, obviously, like I showed, we downgraded our leaders, but I easily have another 25 stocks that can take the place of the ones that got pelted today. But when the number one theme takes a hit in the market, it certainly leaves you feeling uneasy about the overall market and what we may see, and this happens from time to time. For the last 4 months, we've been seeing the heavy water being carried by the heavy lifting being done by leading stocks, blowing the indexes away. We may see that turn on its head and some relying on the indexes as this rotation works itself out. And as we see these Q1 earnings reports, actually, it's Q4, they're being reported in Q1, as these earnings reports they really start in earnest this week. We've also got the Fed this week, um, and what these AI themed stocks say during their earnings report. My thought, and I hate saying think because we rely on facts here, but this seems completely overblown. You don't just blow out 25% of the market cap of an entire sector based on one model that people are questioning actually how many CPUs they were actually using to develop it. So there may be news that comes here. There may be some hard bounces in these names. We'll be monitoring them for relative strength. That is the best thing you can do right now is watch relative strength on these type names. Some of them will form bases. Some of them may have topped for this bull run, and we may see rotation into other names. I mean, there were several names green today that had nothing to do with AI. Others showed nice relative strength on a day like today. So, as I said, there are plenty of stocks to turn to. But my thought is that we need to rely more on the indexes now that the leaders have been blown to pieces. So here are the numbers on the day. The headline is Deepseek stock turns AI data center stocks deep red. This is not a misprint. On average, the 21 out of 21 list was down 12.65%. And like I said, this is despite being we have 13 different sectors in this list right now, and 10 of the sectors got hit as part of this theme. Sometimes you don't really understand what all the correlations are. We knew that things were tied to each other, but maybe if a chip stock gets hit, you may see the other chip names get hit. But in this case, I'm going to show you over 25 names that just got destroyed today. But one up, one even, 19 down. The big eight. Uh, Money rotated into some of the recently weaker big eight, namely Apple. Meta showed some strength. Amazon had a very nice comeback. Netflix was only down 0.5%. So rotation out of some of the names into others, as I said, Nvidia down 17%. On average, the big eight down 2.6%. The RG8, so our eight growth ETF composite, we developed this in March of 2021. Today reminded me of one of those days. The only intraday higher move down that I can remember was when we were down 8% intraday in, I think it was February 23rd, 2021. And that week, we actually had a 12% drawdown, but the RG8, we will not have a 12% drawdown the way we've made rule changes and positioned our portfolio. But still quite a hit on the day. The RG8 down 3.3%, and IBD 50. This tells you all you needed to know about the leaders. It was down 9% on the day. The S&P gap down 2.2% at the open. It did put in the low right away. and that was money flowing out of tech into a bunch of the other sectors. And you can see that with the RSP, the equal weight, actually being slightly positive on the day. NASDAQ 100 was the worst. Dow was the best. We'll take a look at these momentarily. So let's get into the charts. We'll start with the S&P 500. Let me bring up a 5-minute chart here. You can see the gap down, put in the low right away, and started to rally. Maybe it's no big deal, right? Well, we did about trading in about a 0.75% range for the rest of the day. And while that's pretty good, it was actually somewhat tight on the S&P side, but no bid at all. Let me show NVIDIA here as it just dripped all day. AVGO, same situation, just really no buyers to be found in these type names. So back to the S&P 500, we did an undercut and reclaim of both the 50-day and the 21-day moving average. And today's low is certainly critical to hold as it is below both of those key moving averages. NASDAQ 100 hit the hardest, closed mid-range, down 2.9%, breaking the 8, the 21, and the 50-day moving average. Major relative weakness, obviously, and it has shown relative weakness since this big candle down in December. On to the Dow Jones. This is the leading index today, up 0.6%, riding above all the moving averages. The 21 is going to come up through the 50. It's also the leading index year to date. So it's a value index, and very clearly money, which flowed out of it during December, has been flowing back into it in January. Mid caps, let's go to the mid cap 400. Closed right on the 50-day moving average. 4-day pullback for this index now after a nice move up. The Russell 2000 bounced at the 21-day moving average. Has not been able to get above the 50-day moving average despite flirting with it over the last 5 days. And let's look at equal weight S&P 500. This looks just fine. It looks like it's flagging for a breakout. 5 tight days here above the 50-day moving average. The 21 has curled up, so we'll keep an eye on this broad index. And again, this outperforming is just indicative of money flowing out of tech into the other sectors. So those are the major indexes. Let's go to inter-asset correlation. The VIX closed at the low of the range, but still it was up 20% today, back above with a 1790 handle. We want it below 16. It's no longer below 16. So big tick up in volatility today. The US dollar, not really a factor today. Traded, it was up on the day. Let me double check something. Yep, up on the day. But this was after about a 2-week pullback in the dollar, so it was due for a bounce. How did that correspond to precious metals? Gold with a pullback today, bounced at the 8-day moving average. GDX gold stocks undercut and reclaimed their 8, bouncing at the 200-day moving average. Silver weekday today, it's been the weakest of the three. Bitcoin pulled back today, undercut and reclaimed the 21-day moving average. Normal action there. On to bonds, BND, the broad bond index, popped. This was money flowing out of fear into bonds as rates pulled back. So you see the gap up on the BND. TLT's the long bond, gap up there too. The 30-year TYX gapping down, as well as the 10-year yield gapping down as well. So that's our inter-asset correlation. Let's go to the tail of the tape. Mention the news, obviously. The keys coming into today, we wanted the S&P to hold that 6,100 level. Not exactly. We broke that gap down overnight with the news throughout the weekend. Did open on the lows, and we did hold the overnight lows all the way down at 59.15. So actually a pretty decent bounce off of the overnight lows. Would the NASDAQ 100 flag to all-time high? Absolutely not. That's off the table. Russell 2000 continues, although it held up pretty well today. Still cannot get back above the 50-day moving average. Day count, 7 out of 9 up, due for 1 down. We got the 1 down, but what we didn't count on was the destruction in the leading themed names, obviously. First day below the 8 EMA. eighth day above the 21 with an undercut and reclaim intraday there. Expectations, not so much positive now. We'll change that to neutral as we have a mixed bag versus the S&P and the Nasdaq 100. Action today talked about the rotation into value names. As far as the portfolio goes, stopped out on seven different names: NVIDIA, Marvell, Broadcom, VST, GEV, VRT, EQT, and we trimmed QLD with the break of the 21 and the 50-day moving average. This dropped our volatility adjusted beta from 1.57 to 0.94, quite a tick down. And our balance at risk came in around, I think it was 5.6. It's 3.4 now. As we stopped on all those names, we got to obey our stops. But obviously, with the gap down, we gave up more than we were planning to under normal action. This was certainly not normal action today. But the bottom line on the day, the Deepseek surprise AI data center theme stocks absolutely crushed. So Tuesday's keys. We hold 6,000 on the S&P. Can the Nasdaq 100 get back above the 50-day? Can the Russell 2000 challenge the 50-day? And AI data center, will these names bounce? Sometimes big moves down like this take 3 days before you see things start to go sideways. A lot of it may have to do with what the analyst community feels overnight. And if they think that this is a sea change or if this is overblown, that may trickle through to what the institutions decide to do with their names. They don't institutions aren't usually so quick to just throw things out. It's the hedge funds that trade rapid fire and the algo. So we'll have to see if the institutions support some of these names. Now let's take a look at some of the carnage. I've got a list here called Deepseek Deep Red, and I'm going to go through. Let's bring this up here. I mentioned the different number of sectors here. So we had semiconductors, we had the Micron. Really consider it in chips as really that kind of trades the same way, but really it's a memory company, components for computers. Uh, Alternative energy names, utility names that are providing power to these AI data centers, electronics names that provide components, also machine names, same type thing, providing components, networking, uh, building like Maztec and Modine, just general networking type names again, and some actual real energy nat gas names that had been staked as providing cheap energy to the utilities to support the data centers, and then one software name that got hit hard as well. But these are going from like basically down 10% all the way up to over 30%. So let's go through this list and you can see the devastation in this. And I honestly, like I said, haven't recalled anything like this happening to a single sector in one day and just no buying whatsoever. But this is what you get when there are no absolutes in the market. You got to be prepared for anything. It's not an excuse to say, well, that never happened before, because our responsibility as a fiduciary is to cover all the bases. So here's the broad semiconductor index, SMH, breaking all key moving averages, and then the key chip stocks within there. NVIDIA breaking the 200-day, Marvell breaking the 50-day, Broadcom breaking the 50-day, Taiwan Semi breaking the 50-day, and ARM Holdings, the strongest relative to the rest of them, holding the 200, the 50-day, and just below the 21-day. You can see some of these bouncing after hours today. Let me take a look at SOX 212. Yeah, SOX is up about 1% after hours today. And a new one, SMTC, very difficult move down on that, breaking the 50-day. And the volume, look at the green volume on these. It was massive volume and massive losses. A-Lab, it's in the chip sector. It's really a component that ties to chips, but coming down into the 200-day moving average. And then Micron, as I mentioned, was already under the key moving averages, but with a gap down. On to energy, and these are really nuclear related names. Some of these are really bouncing after hours. New Scale down 28%, NNE down 25%, Oklo down 26%, Constellation down 21%, GE Vernova down 22%. Breaking moving averages, breaking the chart. We'll be watching what happens when these bounce, and some of them are bouncing after hours. But when they come into declining moving averages, that's where the rubber meets the road to see if they're going to form some kind of calm down and form an orderly base, or if there's going to be additional selling after this bounce right away. As I said, sometimes this is a 3-day move when you see something like this. Also, Bloom Energy. Um, Down 25%. On to mining. This is mining, but it's really uranium, Cameco, uranium miner down 15%. Onto the utility names. These have been acting like growth stocks because their growth rates were extremely strong outside of what utilities normally are, but it was all based on providing the power to these data centers. And we're seeing bounces after hours on these two, but the charts broken for now. Here's Vistra down 28%, NRG down 13%, Talon Energy down 22%, Celestica, this is an electronics name, down 28%. This was one of Seeking Alpha's must stocks to own for 2025. It had been getting a bounce throughout January based on that, gave that all up in one day. Amphenol, great earnings report and up guidance, gave it all back in one day. More machinery names. This is VRT is cooling, down 30% on 624% average volume. Paused at the 100 level, which was also the 200-day moving average. Eaton Corp Machinery breaking the 200-day moving average. BWXT down 13%. Networker Arista down 22%. Modine, this is a AC company down. So look at how that broke the 200-day moving average, down 26%. Maztec, this is known more for heavy construction, down 18%. Frito, uh, coming into a big gap up in its last earnings report. It's basically filled that gap, down 31%. NBIS, hot new content AI stock, down 37%. EQT, this is oil and gas name, down 9%. We got stopped on that today. AR, also down 9%. Software, Oracle, big name, was mentioned last week as one of the big providers for the government, $500 billion or so infrastructure and AI build out name, down 14%. Two ETFs here that are tied to uranium, URNM down 10%, and NLR down 11%. So just carnage. Let's go to the 21 over 21 list, or I should say what's left of it, to see what survived today or what was not down much. Twilio, Cyber, undercut and reclaim the 8, and a gold name, AEM, bounced at the 8. Reddit held up pretty well, undercut and reclaim the 21 and the 8. Dutch Brothers, so we're still holding Reddit, Dutch Brothers, and Nugget. Bros bounced at the 21. GDX holding the 21-day moving average, and then DEC bounced at the 21. Ralph Lauren still holding up fine. Bitcoin, we already discussed that. Robinhood has nothing to do with AI data centers, but was still down 6.6% on above average volume today. Actually, a normal pullback considering all of the big blue volume bars here. And this is one that's at the top of our list to probably take a stab at. I want to make sure I've got my 48 alert set for Hood. That's going to wrap it. As always, like to hear from you. The email is don@revereasset.com. The phone's 855 Real Wealth. Still have tons of people coming clients. We don't plunge with new client money that comes in. We have a very slow, methodical assimilation process. So any of the new money that came in did not get hit very hard, depending on when it came in. And then again, of course, our stops will keep us out of trouble most of the time, but we did take a bigger hit than expected on a lot of the names today with the big gap down, and really the equivalent of a black swan hitting that AI data center theme. Multi-sectors hit one theme, but 10 different sectors at least, as I mentioned. Our flagship portfolio named GROTECTION, and we also have TurboTection now down, I think mid 6% today. It is more volatile than GROTECTION, but we describe our process transparently every night on these videos. When we take it on the chin, we don't hide. We'll tell you exactly what happened, why it happened, and more importantly, what we're going to do to follow up on that. And primarily, as I said, we'll be monitoring relative strength, seeing the how these things bounce, and seeing if the big rotation into value names continues. That's really the main activity that we'll be doing throughout the rest of the week. Appreciate you listening. That is it for Monday, January 27th. This is Don Vandenbord with Revere Asset Management, telling it like it is. It ain't all good news, but it is the truth. Thanks for listening and have a great day.